All right, guys. What is going on? What is good? What is good? Welcome to FAFO Friday. Right? FAFO Friday. Who do we got here? Who do we got? Mason, MJ, George's dog with the diamonds in here. What's good, Smokey? What's good, Cameron? Eberneth, convicted capitalist, Jordan D. Shout out to Jordan D for 100K combine passed yesterday. I don't share every winning trade. I don't share every past combine. We win so much that people are complaining, oh well, passing a funded challenge doesn't mean anything. I guess we can agree to disagree, but when you win so much and it becomes normal, I guess it loses its value, right? So that's kind of the point where the industry is at in today's world. So, but hats off to you, sir, for another one. Good job. What's good? Torty, Pop, Oscar, Pavlos, Roger, and anybody else that I might have missed. Now, I have a lot of markups here, and they're hidden. I will show you them in a second. But there was a lot going on today. Today's been fun. I'll say that. Today has been challenging for sure. In a good way. And I definitely enjoyed it. So we'll talk about a few things and, go from there. So, real quick before we get into it, I know you guys probably saw it on my story yesterday, or my Facebook, but my plates finally, dude, I've been waiting a month for these plates, dog. Look at that. Look at that. You see that shit? My own name, dog. Right on my license plate. Right on the back of the Corvette, baby. You gotta fucking love that shit. I might do donuts at my old high school. I don't know. I might do it. We'll see. If you see me on the news, don't be surprised, chat. Be like, oh shit, he did it. Right? What's good, Ram? What's good, 1999? Join the Discord, but I'm not able to see or interact. It's like I'm waiting in the lobby. Damn. Nah. You got to connect your YouTube with your Discord, my friend. Discord user settings, connections, YouTube, sign in. Was good, Woodley. Free marketing with that plate. Yeah, it wasn't fucking free at all, though. I tell you that. I spent a lot of money on that shit. Not a lot, but let me tell you a quick story before we get into it. Well, because everybody likes to show up fucking late. Let me preface this with, yes, it's not brand new anymore because it's been like 7 months. I bought it in January. It's still a relatively new sports car, okay? And you would think, oh man, if I had one, I'd fucking drive it everywhere. Wrong. Let me tell you something. Downtown Houston is horrendous, okay? There's shitty drivers. There's fucked up roads. There's like bumps and potholes and all kind of shit in the air. Like half of downtown's there's construction on the roads. They're building buildings. There's like homeless people over here. There's like, I can smell weed everywhere. I'm like, I'm not taking my car down here, bro. So I Ubered. And Uber, I spent damn near as much on Uber as I did on the fucking plates, dude. I was like, God, dog. And then the city charged me money too. I'm like, are you serious? The city charged me like $75. I was like, $75? But I already paid for them, bro. You know? So I was like, here. So I was like, I want the plates. Here's the fee. Here's the fucking tax. Here's this other shit. Here's Uber. I'm like burning through cash, bro. Not a lot. It was like a few $100, but still. It was like, for a piece of plastic, bro. Hundreds of dollars for a piece of plastic. It's fucking insane. Right, Young Flo? Yeah, we're not doing any high speed chases. No, sir. No, we're not doing that. Oh, okay. Good job. 1999. It's not even metal. Oh, I don't know what the material is. It's a normal license plate, bro. Whatever. It's either a hard plastic or a fucking, I don't know. Whatever it is. But anyway, let me get to what I got to get to. So we don't bullshit the whole time. Right? Okay. So I said a lot today. I said a few things in the Discord. I said a couple things on Twitter. I mentioned this bull flag. No. Sorry, I didn't say bull flag. I mentioned flag on Twitter. That was like right in here. Right? So, of course, what do? We rip ass lower. We clear a lot of those lows. Right? So, these two lows here, right? That gets taken. And this actually ends up becoming it might be hard to see, but if you zoom in enough, consolidation, left it, back into it, lower, some highs, left them open. So what's that starting to look like? If we have a consolidation, we have some highs right here, right? A level of distribution, right? So what is that starting to become? What's that starting to look like? Again, I know there's a lot of markups. That's why I told you. That's why I prefaced that. There's your big flag that I had pointed out. And so it's all interconnected, chat, is what I'm trying to tell you. So they create the flag, right? Then they rip it lower. But remember, there's your original consolidation. We left it back into it to go lower. We saw a level of distribution to go lower. All of these lows, right? There's your manipulation. This is also, that's why one of you asked about it. I don't remember who it was. And I told you to look at the 5-minute and the 15-minute. And I don't know if you did, but if you didn't, right? You asked about this mitigation over here, right? That was utilized yesterday, right? Oh yeah, high, low, higher, high, traded through that. That is your mitigation here. That becomes what? An inversion. Ooh. See that shit? Right there. Boom. It digs into that just a little bit. Couple of points. Maybe like a few ticks into that. Then sends for that high. So that's why I said today's been fun, man. Today, it's been like slightly challenging because it was difficult to frame an entry that didn't really have like some sort of respectable RR, and I couldn't really frame that here. I mean, even though it looked good, right? That is distribution turn reaccumulation, but given this, that wasn't enough for me personally. So I was like, ah, fuck, I'll just let it go. All right. But yeah, Roger and Oscar, yes. Original consolidation, left it, into it, away from it. There was a term I was going to use earlier. I don't remember. It rhymed. Man, I don't fucking know. Let me look at it. Let me look at something real quick. Might be in my other. Oh, fuck. I'll have to look at it later. Anyway, original consolidation, left it, back into it, took off, leaves equal highs, forms the flag, rips the flag, 15-minute inversion, right? Inverted imbalance, or inverted mitigation. I'm sorry. Inverted mitigation. Then we took off, and that distribution here was reaccumulation here for a run to terminus. Now, that explains why this blue line is here. That explains why that flag is here. But that does not explain why these other vertical lines are here. And as much as I would rather not short, and I'm not short on anything, this is looking like a sell model. However, number one, NQ is strong today, or the strongest index rather. And I think, yeah, that's probably the only reason. But if we take a couple of these markups off, okay, and that one, okay. So I've told you before that the terminus, right? So that would be here. The terminus of a model, right? Either one. So in this particular example for today, we'll say the terminus of the buy model, right? Terminus of a buy model has the potential to be the manipulation portion of a sell model, right? I've shown you before that they can be interconnected. You can have a buy model that turns around and then ends up becoming a sell model. Part of me thinks that that is the case here today. Part of me is like, I don't know, because I think it was ES that still had that one, I think some 30 level that I had pointed out yesterday. That could be a factor. So I'm not entirely confident, but again, this is looking like a sell model. So why would these lines be on here? I know there's indicators that do this, but the idea behind where we are right now is every vertical line that I've drawn. Yeah, well, yeah, Roger, you're right. If you're gonna ping pong, at least do it that way, right? Every vertical line that I have is 15 minutes. So imagine for a second if we come back to, I don't know, a long time ago, when I taught you fractals. Do you guys remember fractals at all? The 3-bar formations. You better fucking remember. You better remember, chat. Or I will ban you for life. I will ban you for life. And that's it. Right? Remember this? It is a the candle in the middle, right, has a candle to the left that has a lower high, and a candle to the right that has a lower high. It's very similar. Thank you, Cameron. Rest in peace, channel 96. It's very similar to the intermediate term high and intermediate term low. Rather, it's more immediate though, right? So like, for example, this is probably a shitty example, but like a fractal low would be like right here, because we have a candle in the middle, right? That candle has a higher low on the left and a higher low on the right, right? So it's a fractal low. And right now, price is trading higher. That's a reasonable example, right? The difference, though, between that and what these are doing is this is a representation of the 15-minute time frame, meaning that this 15-minute, its high is here. This 15-minute, its high is here. This 15-minute, its high is here. So when we got that fractal high on the 15-minute, that means the next 15-minute candle is like a NCE, basically. Does that make sense? So that means 11:40. Well, it's lunch too, so that's but 11:45, right, starts, which ends that 11:30 candle, right? 11:30 to 11:45. So that means the next 15-minute candle is something that I would want to short above that. Right? It's not just New York Open. It's not just equities. It's not just midnight. It's not just a session. It goes all the way down to the actual candlesticks of whatever time frame you're looking at. So I was looking at that today, right before the stream. I'm like, okay, well, this may sell off because we have some lows, right? And like I already mentioned, if need be, that may be a sell model. And the reason I told you I'm not short is because this is our strongest index today. And then on top of that, you may not have noticed, but you know how we got this big flag over here? We got another one like right here. So I don't know why my eyes were gravitating towards that today, but we got a flag here and we got another flag here, and it rips them both. So I don't know. I thought that was funny, but maybe that's just me. So anyway, that's what I've been watching for on Nasdaq today, and that is also what I have been looking at on the S&P. So earlier in the Discord, I had mentioned 6,414. I meant to say 415 to round up. I did not. So there is that. So what level would that be? If we look at SPY, this is not SPY, but if you do look at SPY, yesterday it has those highs. So one easy way to see that is regular trading hours, right? ES 15-minute time frame, regular trading hours, right? That gap up from yesterday. That lower high here was short-term weakness. And that short-term weakness, right, is also a buildup of liquidity. Anybody who was short yesterday and held on all day, hey, great. That's a good trade. Well, if you held into the close, it's burning a lot of your profit. Yeah, but if you took shorts yesterday, wonderful. If you held overnight and you got greedy, if you got greedy, you got to be careful because those are low resistant highs. So at some point, now that was yesterday, Thursday, so today's Friday, right? So at some point, when the market is going to seek higher pricing, it's going to want to run that. And that's why I mentioned that earlier. Okay. Now, how we got there, personally, I didn't like how we got there. And this is like one of the notes that I have in here, by the way, is you got to remember the consolidation this morning. Okay. Leading up to equities, we had our consolidation 5-minute time frame. We left it back into it, and then we launch. So you know, okay, those lows are going to be left open. And again, I pointed out 64. I meant to say 15. I said 14. But I mentioned the highs on SPY. I mean, fuck, you should understand that this is what we're looking for, or this is what I'm looking at, okay? And then also, too, this whole thing here is kind of a shitty consolidation. You know, it's not the sexiest looking thing in the world, but it is there, right? General consolidation, and it left it. So it's going to want to seek that. So what does that mean? What do you do with that information? Well, if you know where the market's going, and if you know where it's not going to go, what does that tell you? What does that frame? That frames a bias. That frames a high probability bias. That means we are more likely to go higher than we are to go lower, at least to the extent of those lows. Right? Now, again, why am I saying this? Because I think some people still don't get it, right? I target equal highs and equal lows. Yes. I target low resistant highs, low resistant lows. Yes. But you got to understand the market, okay? Whenever you get to a chart, whatever time that is, when your eyes go straight for lows and highs and consolidations, whatever it is for you, right? You don't just go, okay, well, since I'm here now we can short. We can short this market. It's going to want to run the lows. Absolutely not. Absolutely not. You have to understand, I think this is law 2 or number 4. There's 4 ways that the markets move, right? First one being liquidity to liquidity. So that means if we have liquidity that has been built up, right? It's not going to run down there, not until, if we have, let's say, sell side liquidity, all right? It's not going to run this liquidity down here until some sort of higher buy side liquidity. This will actually be a lower level of buy side because that's a short-term high being taken. The higher set is right there. Not set, but it's a higher price point pool of liquidity. Price is going to be bullish until it seeks that. Do you get me? So what's going to take place is those lows are going to be left open. They're going to be left open. And yeah, Mason, that 930 high was a engineered high. You're correct. That's a great observation, right? Short-term high, run that bitch lower. Everybody thinks, oh, it's going lower. No, it's not. Boom. See that? So, but anyway, my point is that pool of liquidity will be left open. All right? That will stay open. Price will be bullish until a higher pool of liquidity. Now, I know what some people might think. You might, let's say, maybe you thought this was a mitigation in here. Right? I mean, it looks like it because you got your high, your low, your higher high, and our lower low. You actually have an imbalance in here, and you have a no shirt candle right there. It taps into that and trades lower. So you could argue, like, yeah, that could be a short, and it does trade lower, but where does it not go? It doesn't go to the lows. It stops at 1040 and then runs 64.14. Right? Now, because we've done that, it may want to go lower. but it's 12:30. What I was talking about earlier, and I had mentioned yesterday as upside, and we actually went lower like all day yesterday, was 64.30. That's up here. So because to me that still is on the table, and because NQ is our strongest index today too, it's hard for me to trust shorts to the extent that we would trade down here. I don't think that's going to happen. It could, but I don't think so. So at this particular point, I don't know. And that's why this vertical line is here at 11:15, because that oh, you know what? That was actually from a little bit of a higher time frame, I think like a 5 or a 15. But what I was looking at to see was if this was going to be a sell model. Can you start to see it? If you haven't seen it already. Something like that. Right? So, I mean, it looks okay, but it's not really giving sell-off vibes. So, there's that. Oh, you know what? Okay. This is why I took notes, chat. The idea of leaders and laggards, right? How do I explain this? If NQ, okay, let's go back to NQ for a minute. If NQ, right, is leading the way, and it ends up Thursday, August 7th, right? Oh, yeah, previous day high, rather. So it meets previous day high at 9:10, right? 9:10 for ES is here. So you see what happens, and we need to clean this up now because I can't even see shit. At 9:10, okay, this point in time, NQ is higher. And NQ is meeting a higher pool of liquidity versus ES. Because remember, ES, previous day high, is at 64.14. We'll just put that back up at the full color scheme. Sometimes I'll put the opacity down like once that has been met so I don't get confused accidentally because I'm getting old as fuck. But my point is, ES, it's not trading to that same pool, right? It's not doing it. But it still has that pool there. So this pullback, right? You shouldn't be afraid of that. The point is, a lagging scenario may present opportunity. It still has opportunity. It's not done. Okay? It's not done. So we pull back. This, to be fair, in this, once we actually got that like at 10:30 or 10:40, like whatever that was, I personally thought there was a really good chance we could hit that lack of wick. I thought we were gonna do that. It's not a surprise that we didn't, and I wouldn't necessarily count that as its own imbalance, but it leaves this open on a 15. Trades back into a discount relative from the lows that we left open to that high, which, like Mason said, the engineered high. This is a discount in that range. Then we extend for that. So that to me was that extension here was the opportunity if you were not able to do anything here. Does that make sense? Right? Basically, for example's sake, leg 1, pullback, leg 2. All right? Drop some ones in the chat if you guys are with me so far. NQ might be leading the way, and that's great. Arguably, that's the better one to trade. But even though it's bullish and it's strong, right? ES is still going to trade higher. So, and again, that's why it's a lagging scenario. It's also going to trade higher. It's just not going to do it at the same time. It's not doing it at the same time. NQ goes first, right? NQ jumps off the cliff first. And ES is like, okay, I guess it's safe now. Now I'll go higher. So, although, because people still ask me about, well, what about leaders and laggards and all this shit? You typically don't want to trade the laggard. But that's not to say there still isn't opportunity. And it's all based on pools of liquidity. So I gave you that level. Now, did I expect I don't know when I mentioned that to you in here. That wasn't timed on purpose. But whenever that was, there was your opportunity for higher pricing. So, simple as that. Right, Roger. No fear of missing out. No fear of missing out. Yeah, this looks awful. So does this up here. But yeah. Give me 1 second. I just want to make sure that I did not leave anything out so far. Okay, maybe I didn't specifically say that. Let me go back. So let's go back to NQ for a minute. And take everything off so we can clean this up. When lows are left open, okay? I just want to watch live price too. When lows are left open or when highs are left open, it's good to know that they're there. And I don't always know how long they're going to be left open for. Right? Like, so for example, those equal highs here. I don't know how far they're going to run it. I don't always know that. Okay? But I do know, hey, you know what? If they're perfect, there's that P word. If they are equal highs or low resistant highs, at a certain point, I know, like, okay, they're going to come back for that. But they're not going to come back for that until, like I said earlier, a previous pool has been met, right? So you see equal highs, market leaves that. It leaves them open. It runs that low, sweeps that one, and that one back here is hard to tell. That one right there. And to be fair, that one's a lot more obvious. That one's kind of just like nested in there, but I feel like more stops would be at this one, but whatever. Either way, it's leaving that open, then grabs, you know, all the stops. Because remember, when this is our range on the day, what has the focus been? When price is like roughly in here, when you look to the left, what has taken place? Consolidation, right? Left it, into it, off of it. So from 8:30 to whatever, you know, 10:36, right? So the first 2 hours of the day, we've had explosive upside. We've had almost 200 and something points upside. So that means right now, who is in open profit? That would be longs. So once longs, right, see new high of day or start to see a retracement, people start taking their stops, putting them at the low, putting them at the low, putting them at the low, or maybe even that low, you know, whatever the case. So the market is coming back for those, but it's building liquidity here to run that later. Do you guys, are you picking up what I'm putting down here? The market is constantly building liquidity to take it later. Building liquidity to take it later. If we're still bullish and we're going to build liquidity there, okay, run it later. And the markets are constantly doing that. So while you're in that scenario, okay, this is why I'm trying to explain it this way. Because when you see something like this, oh, you got a big flag here, you got some equal highs or whatever, that might be a short to you. And it's going to remain bearish, like I said earlier, until an opposing pool has been met. So at those particular times, right, from the time we left those highs open to taking all these pools of liquidity, during that time, it's not good to long. It's not good to long. This is a sell program. It is a sell program. So the market is going to quite literally take price and run it lower. And that's what it does. Now, once the opposing, right, once we have done its business, once we have shifted, now we're in a buy program. Now we can look for longs up to that. Okay? So if you're in a sell program, if you think you're in a sell program, it's not good to long for the highs until we've either ran previous liquidity or swept previous liquidity. Ideally swept, because a run is going to continue. A sweep is like, it's in there and then it's out. Okay? So if you're in a buy program, let's say in here, for example, as the market's going higher from 11 or 1040 and beyond that, right? While it's doing that, you're in a buy program, you should not look for shorts. That means that imbalance, right? Whatever was utilized to go lower is no longer going to be utilized to go lower. Okay, so all those imbalances, all those up candles or whatever the fuck people look for, right? I'll just mark that one. I'll mark that one. I'll even mark that one too. Right? If you're trying to short that imbalance, you got wrecked. Either one of those up candles, wrecked. You tried to short, it went higher. That imbalance right there. We must include the gap because there is a gap there. Trades through it, becomes an inversion. Right? Algorithmic. That, it wasn't utilized for shorts here, but because that is there, but we've already taken liquidity, now we have those highs and especially this consolidation, that is not a short. Nothing in there is a short. Every concept that we have or that you look at is going to get wrecked because it is quite literally going to seek opposing liquidity. So while you're in that, right, what is taking place? Where are we at right now? Where are we going? Where has it been? Anywhere in here, where has it been? It swept lows. Where are we going? Equal highs and a small consolidation here. So now we can frame a high probability direction, and that would be higher. You see that? Okay. We're making good time. That was For the most part, that was pretty much what I wanted to say today. Okay. So when you're analyzing price, right, you can kind of see the C8 logo here too, as well. You need to know if you're in a buy program or if you are in a sell program, or if you're at a reversal. Meaning like if you're at terminus, or if you're a like the manipulation phase of a buy model. Does that make sense? And this is why this stuff gets complicated. I try to simplify it as much as I can, but you got to remember there's various stages: original consolidation, distribution, redistribution, manipulation. We really don't, this technically is the low risk long or the low risk buy, and we really only have like one stage, one real stage without much pullback. But I would say that that right there is probably the second leg here. So it may not be perfect, it may not print every stage the way you want it to, but every market maker model has several stages, and you need to know where you're at in relevance to that framework, so you know what to expect. So you know that you can expect a pullback if you're overall bullish, right? Or like say in here, for example, traders don't know where to move their stops once they're in profit, and they start to get scared when the market pulls back, right? So where should your stop go? Well, where it shouldn't go is the high end of reaccumulation, because that's what price is most of the time going to trade into, because it's going to do what? Reaccumulate to go higher. So should your stop be at the high end of that? No. Should your stop be at the low end of that? It's possible. It's possible. But you wouldn't know that unless you knew that that was reaccumulation. So 848. 848 up here? Jesus, I don't know about that. Not today, at least. Maybe you're right, maybe you're wrong. I don't know. I am done for the week here. I am done for the week here. So, the last couple of things. Number one is Google. Right? We finally got to where we have been anticipating. Just over 200. Right? See that? Remember that gap? Remember, I don't know, anybody. There might be at least one person that tweeted the low of the year. There's got to be someone out there, maybe. It's possible. But Google, and I remember walking you through this year, and I told you back in here, I was not aware until after I was already in that, that they had a lot of lawsuits and shit going on. So that to me is what made Google slow as fuck. Fundamentally, you know, they were fighting demons in the courtroom, basically, which was not entirely a surprise. We finally, you know, got some upside, and then we had some lows in here that the market came back for. And I remember that day, June 23rd and even June 24th. If you go back and watch those streams, you don't have to, but I remember I told you, I'm like, yeah, I'm out of this. I've gotten so bored with this that I'm over it. I was like, it's probably still going to go higher though. So what inevitably takes place? Here we are. So if you have followed along this year with a lot of these stocks, Google has finally, you know, met at least that halfway point. I don't think it's done, but I do think that that is a very, very good follow-up on that. Yeah, I know, Oscar. I goobered that exit big time. I mean, it was a slight profit. I mean, it wasn't crazy, but you know, the rest, I had opportunities to re-enter. Every swing does that. There's always a chance to re-enter, right? You had that weekly, that gap in here that got traded through. You had that as an opportunity for an inversion. You had that down candle there a couple weeks later as an opportunity as well, and that's what that is on the daily, by the way, right here. Right, so it's trading into those down candles that took those lows, right, that I goobered out of. That was the re-entry to go higher. But I let it go. If you're gonna let it go, let it go. You know. So, but let me see. All-time highs is not done. 208.70, that's not done. But this would be a great place to probably take something off. I wouldn't hold that entire thing, but that was pretty solid. So there's that. And then the last one I have for you today is VST. So honestly, VST's been doing some weird shit up here. Like that, like yesterday. Like, that's weird to me, but we opened drastically lower and then we traded back above very close to all-time highs. So I know we were watching that one as well this year. And arguably that one was way better than Google, because that actually ended up going below 100 and it's at 204. So that doubled. But yeah. So stocks have been pretty easy this year, you could say. What does the orange box represent? Some sort of mitigation. I think it's those three here. Those three up candles together prior to that run lower here. Right? So low, high, that's a lower low. We actually extend beyond that for, I think that was last year's low, or not the low of the year, but that was a intra-year low from September. And that is what was taken here. And so those up candles there is what I was looking at once we got through it. So we got through it here, into it there. That I was anticipating the run on here. And we ended up trading back to the low end of it for those lows. Body still respecting that, and then we took off. So that was the weekly didn't really look all that great, but the daily, that would be the daily mitigation levels. So, but anyways, that'll pretty much be it for today. We talked about leaders, we talked about laggards. Leaders obviously is the one that you want, but if you don't get it, if the laggard has opportunities, right? That's what we'll end it on today. Like ES, for example. Engineered high, we traded lower, then we got our run. And that was a lagging scenario to NQ, which I think ran its high at 910 or whatever we said earlier, right? 910 was not the run for ES. ES did not until 11. Right? So it's that lagging scenario for later opportunities if you missed out on the leader. Price will leave lows open. Okay? Price will leave lows open at a minimum until there's been some sort of pull. This is not, I would not short this, by the way. But I'm saying as an example. Lows will be left open until buy side has been taken. And in the case of Nasdaq today, on a smaller time frame, highs will be left open until a pool of liquidity has been taken for that reversal. All right. So if we're in a sell program, meaning like we have highs, but we see that there's lows down here, we can short down for that. It is counter higher time frame potentially and stuff like that, but it's still tradable. Okay. So you don't want to sell in buy programs. You don't want to buy in sell programs, right? You don't want to sell in buys. You don't want to buy in sells, okay? And that the highs don't need to be ran just because we see them. Like whatever time you get to the chart, you need to wait for liquidity to be taken, right? And then we talked briefly, we had brief follow-ups on Google and VST, right? So hopefully you guys had a good week. Hopefully you learned a lot. But yeah, y'all be good, be blessed. Don't do anything stupid this weekend. And I will see you guys on Monday, the 11th, for the next live stream right here on YouTube.
I'm not going away. I'm not going away. Maybe I will stay in control. I'm starting to fall. You think that I'm no good, feeling misunderstood. Want you for me only. These nights could get lonely. I lighten up your mood the way you never could. Don't make me walk away.